Good morning to all traders and welcome to another daily markets watch provided to you by Omega FX. This is Stavros Usis. The 1st of December, we did talk about volatility risks yesterday and Powell did us a trick, okay? There was a surprise in his speech. It looks more hawkish than it was ever and has ever been. Maybe because he's nominated and he doesn't want to lose his position or be the one that actually has caused the crisis of 2022. Who knows? Regardless, markets saw some sort of flash crash yesterday. A lot of pairs against the dollar, of course, have weakened, and it remains to be seen whether this is to continue or not. We have seen the initial flash down being somehow being retraced, okay, in many assets, and now remains to be seen whether of course the retracement is going to be full or not. Okay, in some cases there is early signs that it might be the case, in some other cases no. But today we're going to focus on gold, we're going to focus on the S&P and also on Ethereum because it seems that it's unstoppable. Starting off with gold, we talked about last time we talked about a potential move down to the bottom of this channel. We are very close to that level now, okay, and we didn't get there exactly. It doesn't necessarily mean we cannot move higher though, okay. I do see a signal both on the RSI and on the MACD, and this is what tells me right now that the short-term bias is to the upside rather than to the upside, okay. But in the medium to short term, as we can see with the Fibonacci retracement tool used here from top to bottom, we barely managed to do the 23 correction, okay. So we need to get to at least 50, okay, in order to have the bias at least switch in the short to medium term, I repeat, from bearish to bullish. For now, that bias, that time frame bias remains to the downside. So what we need to do is perhaps go a little bit closer over here and draw another Fibonacci retracement. Let's just take the previous high over here and that low. And look at this. We have gone all the way up to 62 Fibonacci, which is also a cluster between the 23 of this leg and the 62 of this leg. Yeah. And we are moving lower. If the 32 holds around 1784, then this could move higher, okay, and make a decent attempt to break 62. Then perhaps head also for the 1800s, which might flip to a resistance, okay. Already happened once, okay, but we might see it happening once again. Now, in case we do move lower and we break past 1784, then the invalidation for this potential move to the upside is going to be around the 1780. If we lose 1780, this is very likely to turn bearish, okay? Go to the channel and even break the channel. And while we are here, but also want to show you is a potential head and shoulders over here, okay. So that would be the left shoulder, that would be the head, and that would be the right shoulder. So there is potential for more downside, okay, and that can be considered as a neckline or not. But either case, the previous low, if this turns out to be a head and shoulder, is very likely to be reached, and that is around the 1721.20, okay, 1720, let's say. So it's very important to draw a very simple and reasonable channel over here, okay, and tell ourselves that in case we do break outside or to the downside or to the upside, this is going to determine the short to medium term bias, okay. For now we remain bearish, and as long as we're below 1788 we remain bearish. Quickly on the S&P 500, we have a similar move to the downside, but now it's trying to actually do a short-term relief rally that is evidently much better than it is with gold, because the signals here on the RSI and the MACD are quite better. Now we did correct down to the 38 Fibonacci retracement of the last leg from the previous swing low, okay, and in an attempt over here to break above 23 we failed, right? So this becomes now the new range between 23 and 38, okay. We are above the 50, and as long as we are above the 50 at 4600, we remain biased to the upside, and the upside can take us up to, I would say, first around 4630 or so, okay, and perhaps then the previous height of 4648, even, you know, all the way up to 4660 or so. But only if we lose this trend line of this base channel to the downside, we're going to assume that the short to medium term bias is going to turn to the upside and is going to be somehow biased to the upside. In this case, we can also draw our Fibonacci from top to bottom, and we have to look for the 50 Fibonacci retracement, which is around 46.52. So 46.52 is a very important level going forward for the short to medium term in case we continue moving higher. Now, how can this move go along with this particular structure we see? Okay, well, there is progress to the upside for now, okay? And the reality is this: as long as we remain above, that went a bit off, as long as we remain above 46, I would say, 45.97, we are setting up a pattern for more upside, okay? But this is an invalidation level, okay? 45.97, I repeat, very important level for the day. If we manage to remain above that level, then we are set to move higher and break the 46.14, which is a 62 Fibonacci, as I said before, and go up to 46.30, at least on an intraday basis. But in case we lose, the swing high over here is very likely to go back to 45.60 and perhaps lower, okay? And perhaps we're going to go as low as, to start testing this channel again. And should that continue, and the 45.64-65 becomes a resistance, or even it might never actually have the opportunity to do so, the next level to look would be the 45, okay? Even 45 hundreds still is going to keep the medium term biased to the upside, okay? Now, the good news, or for some may be good, for some maybe not, is that this is looking corrective. It does not look progressive, which means at some point it's going to stop and reverse to the upside. Okay. Now with Ethereum, we've had an impressive move to the upside. We're not just talking about a short-term relief rally. We're talking about prices moving beyond, above the post-crash levels. Okay, following the Fed's speech, I'm talking about. So now, as long as we're above 45.50, that remains positive. Okay, and remains biased to the upside. If we pull the Fibonacci retracement from top to bottom over here to that swing low over here, we have done the 90% Fibonacci. Okay, so the 90 is important because in case it breaks, that usually indicates that it's very likely we're gonna get an inverse sort of retracement level reached, which means obviously we're gonna do an all-time high. So what I'm saying is that this is very likely to do an all-time high. Okay, that's what I'm saying. Now, regardless of that, okay, we need to pay attention a little bit in the short-term structure over here, and particularly in this particular, in this sort of area over here between 45.50 and all the way up to the top. We do see some corrective structure over here that reminds a terminal pattern, which is called an ending diagonal, okay, which means, and as also seen on the RSI and on the MACD histogram, that we might indeed start seeing a correction, okay? And in case we do remain above 45, but also above 43.87, this is set to continue higher and break to all-time highs. One that breaks to all-time highs that we can reassess. But until then, the likelihood of a correction, of a continuation up, is very good, okay? We need to pay attention here a little bit more to the momentum of the MACD, okay? So these lines, the signal line and the EMAs, okay? In case we don't see a cross, then it might stay here for a while. But if we do see a cross of the fast to the downside, it's very likely we're going to start moving lower down. And I want to tell you something else, that usually when a pattern like this breaks down, we get prices to correct all the way where it started from. Okay, and that is around that cluster over here between 43.87 and 43.50. Okay, so in the very short term, I see more downside coming as a part of a pullback, and then from there, potential to the upside, especially if 45.48 holds, or we prefer that to flip to become from a resistance to a support. Okay, so guys, that will be all for the day. So we had the analysis on gold, S&P, and Ethereum. I hope you enjoyed. Thank you very much for watching as always, and we'll be here again tomorrow with another Daily Markets Watch video. Take care and trade safe.